All right. Welcome to the Millionaire Challenge Mondays. Millionaire Challenge Mondays. So, I am your host today, Joel Harrison. And what I would like for you to do is in the comment section, if you would like for me to look at one of your stocks, I'll take a look at it. But we're going to add, some unusual options activity. If you're trying to make a lot of money in the market, stocks are a great way to go. But, if you want to try to trade the ultimate trading tool that's out there for stocks, you got to learn the options market. So I'm going to look at some of your stocks. I'm going to look at your options. All right, we're going to look at some unusual options activity that's going to be new for some of you. And I'm going to look at your stocks, right? So I've already gotten a couple of stocks earlier, so I've already added them to my list. And I'm going to try to get to everybody's stocks today. Now, we do have a announcement that we want to make at 8 o'clock. So I'm going to end this early today to give myself a chance to get right back on with Shamika and Noble. And then, we want to announce something to you around 8 o'clock p.m. So again, if you're new to StreamYard, what I want you to do is if you fill out certain information, I can pull up your face onto my screen. So like if you have a question or a concern while I'm doing this live show, I can answer your question. This is very interactive. So we do this in the inside of Trading Room. So before we get started, I want to make sure that everybody knows that I am a full-time day trader. I am an expert in stocks, options, futures, and cryptocurrency. All right. I have over 10 years, over 25,000 hours of trading experience. And anything that we talk about today are the opinions of Joel Harrison. They're opinions. I want you to do your due diligence. Anything that we talk about today, my job is to try to teach you guys, looking at charts. I talk with traders all day long. I'm watching TV all day long. So we kind of know what the hot stocks are, but a lot of you guys are having a hard time knowing how to approach the market. So I want to make sure that we're doing this the correct way. So I'm getting used to this technology. So bear with me if I'm having issues. But, investing and trading is easy. You make it hard. That's something that I've been saying for a very long time because the market is rigged to go up in value. Investing and trading is easy. If you know what to look for, I want you to keep it super simple. I want you to keep it super simple. The quickest way to making $1 million is not saving $50,000 for 20 years. The easiest way to make $1 million is to start with $1,000. And I want you guys to do this. So again, the quickest way to making $1 million is not saving $50,000 a year for 20 years. The easiest way to getting to $1 million is you got to train your brain into buying things and flipping it, right? If you buy $100 worth of Apple and you're able to get Apple 25 or 30% off when it drops in price, and then you're able to ride it up in price and it doubles in price, you take your profits, you take that investment, you reinvest it into something else that has dropped in value. The problem is most of you guys don't understand technical analysis. You have the fundamental, you got the fundamental analysis down, right? We all know how to pick good stocks: Apple, Microsoft, Google, Facebook, Tesla. I can go down the list of the top 50 companies in the Fortune 500, right? That has created wealth for us over the last couple of years. But if you don't use technical analysis, if you can't pull up Yahoo Finance or pull up a chart and look and see what Apple's done in the last year, that's probably why you're struggling as a trader and an investor. And investing and trading is easy. y'all make it so hard because you take these courses where you're using all of these different indicators to try to figure out when to buy something. You're using multiple charting systems to try to figure out when to buy, and and stocks go up or down. And I tell people that all the time. So what is the Millionaire Challenge? It's a challenge that you have for yourself. Now you can come along, you can come along for the ride with a lot of us. I've created a lot of millionaires through the inside of Trading Room, right? That room has been open for over a decade, right? And there's people that have been there and have been taking a lot of the advice that we've been giving, investing in a lot of these different companies, and they've been flipping that money and flipping that money and growing that money. But there is a way to do it. I just had webinar week last week. So if you missed webinar week, sorry, the next webinar week is not until December the 12th, 13th, and 14th. It's only $65, right? Why do I make it $65? Because I want everybody to understand this. I could have easily charged a high amount for a small group of people to learn this, but I'm not there. And when I was young, that's what I used to do. I'm older now. I want everybody to understand how to view the market the easiest way, keeping it very simple. So I don't want you to outthink yourself. If you want to become a millionaire, you have to preach it to the universe. You got to say, I want to be a millionaire. I want to have multi-million dollar accounts. And then you need to start paving the way for yourself. But you can't get there if you don't believe in yourself. You just can't get there if you don't believe in yourself. So I started this back in 2017, and I was going through a lot during that time. The year that I created the Millionaire Challenge, I had like 5 family members pass, including my father. So it was a rough time for me when I was launching the Millionaire Challenge. But my family finally got there 4 years later. I wanted to do it in one, but we got there 4 years later, and it's using some of the methods that I'm going to show you guys for free. This isn't an upsell so that you guys can buy a package at the end for $10,000. That's not what this is for. This is so that you can learn something today. And people don't believe that I'm giving out this information for free. I don't care, right? Because there's trillions, there's billions of dollars out there in the stock market, and a lot of you guys are not taking a piece of it. And I'm tired of seeing the market go up. The market hit all-time highs today. Why are you not invested in the market? The market hit all-time highs. All right, there's enough money for everybody to make money, and I'm not going to continue to keep all the secrets to myself. I done pissed all of the educators around me off because I was like, because they know that I'm the best, and I'm still like, I don't care. I'm going to give it out for free. It's just like Tesla. Tesla is the leader in electric vehicles. And nobody understood why Elon Musk said, you know what? I'm just going to give my patent out to everybody. Why did he do that? Because it's not about the money for him. It's about the world changing and having electric cars. And I feel the same way. A lot of you guys are missing out on the market. I'm going to show you guys a couple of ways. You're going to be using the What Would Joel Do method. The What Would Joel Do method is a flag pattern. Most of you guys already know flag patterns, but most of you guys don't know how to trade flag patterns. All right, so we're going to use flag patterns because it's the best momentum strategy to use when buying things that are going to the upside. Everyone knows that I love getting in on the third wave. 1, 2, Joel gets in. 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 And when Joel gets in, he's going to put his stop underneath the second wave. If you don't understand what that is, then you probably do need to take one of my, beginner courses, or you need to attend webinar week so that you can understand, or just go back and look at my last 50 videos where I showed you how to do this for free. There's a lot of people that just teach themselves for free. You never have to buy any of my products. I don't care. I just want you to look at the market the correct way. That's my only goal. All right. But if you want your charts to look like mine, you want to download the Thinkorswim. We're going to be using the Thinkorswim platform today, which is provided by TD Ameritrade. I am going to figure out a way where I can get a referral fee for referring all of y'all to TD Ameritrade. But that's what we're going to look at today, the TD Ameritrade platform. But Thinkorswim is offered to their clients, and it's free, and it's the best platform that's out there. There is no other platform that's better than this, and you get it for free. And most of your 1%ers or your 10% traders are using this platform. Go ahead and download my app. It's free. If you're on iOS or Android devices, you can download my app for free. There is a membership service if you want to be involved in that, and that's for your traders or your investors that want to see what I'm buying. Like when I'm buying things, when I'm selling things, you're going to get the alert first on the app. All right. Again, oh, this was the last webinar week. I didn't change my slides, but this was the webinar week last week. All right, when I did Millionaire Challenge. Well, sorry, the next webinar week, I should have changed my slide, is going to be in December. I think it's the week of the 12th. I don't have my calendar out right now, but it's the week of the 12th, 13th, or 14th. I don't know the exact day, but it's that Tuesday, Wednesday, and Thursday. I did do a Mission Impossible class for your kids last Saturday that a lot of people were able to take advantage of. You can also find me on YouTube. You can find my room that I co-owned with Noble Woods. It's called Insider Trading, over 20,000 members. You can find me at What Would Joe Do page through Messenger. And anybody that's ever bought any of my products, you can go to Ninja Trading. It's only a small group of individuals that are trading in that room. Again, you can go to my PayHip and download any types of products. But let's get to the Millionaire Challenge, right? Let's get to some of these stocks. So we always talk about the S&P 500. Why? Because the S&P 500 is the 500 largest companies in America. You have to look at the S&P 500 to kind of figure out what's going on in the market. That's step one. If you're trying to be an investor, trader, you got to know what's going on with the market. This is what everybody's looking at. I'm going to teach you guys the fundamentals today. If I had to say, what is that one stock in the whole world that everybody is looking at? It's the S&P 500. It's the 500 largest companies in America. You can invest in it. Most of you guys who have 401ks, this is what your brilliant mutual fund manager is putting your money into. They're just dumping your money into the S&P. It averages like 13% a year. All right, so we look at it every day. So that's why it's always the very first thing that we look at. So when we look at the S&P 500, let me go ahead and clear this chart. We need to see exactly what's going on. And I'm going to look at options as well. But let's just see what's going on. Now, the day chart is the most common chart used on the planet. Okay. So your day traders, your swing traders, everyone uses the day chart, and the 200-day moving average is the most used indicator on the planet. Why are you not using it? I don't understand why. How can you call yourself an investor trader and you don't even know what a day chart is? You don't know what a 200-day moving average is. Well, now I'm showing it to you. All right. A true millionaire, a true trader that's trading the actual market. Now, how do we look at the 200-day moving average? Anything that we talk about today, any stock that you look at today, magically, you're going to see it bouncing off this 200-day if it's angled up. That's just how it works. You've been looking for the magic indicator. Here it is for free. All right. I'm going to give that to you. So any stock that y'all give to me today, first thing we're going to say is it above this blue line? If it's above that blue line, it's bullish. If it's below that blue line, it's bearish. It's that easy. If this line is angled up and it's above it, it's very bullish. If this line is angled down, we probably want to stay away from it, because investing is easy. Y'all make it hard. Watch how I'm able to analyze about 100 stocks, and all of them are going to be doing pretty much the same thing. All right. And that's my goal, to try to get everybody on the same page so that you can see what the 1 and the 10%ers are looking at, and stop listening to your cousin Jerry tell you about the market and he ain't even invested in the market. All right. Sorry for the Jerrys that are out there. All right. So let's look at the S&P. The S&P 500, we hit, get this, guys, we hit all-time highs today. Now, what does that mean? That means that everybody in the universe who has ever bought the S&P 500 before today, I don't care when they bought it, 1920, 1930, they could have bought it on Monday, Tuesday, Wednesday, Thursday, Friday, 1974, 1990, every single solitary individual would be up right now. Now that should make you say to yourself, If I've been thinking that the stock market is a gamble, how come everybody who's ever invested in it were up today? All right, unless you bought it today, it is down. It's at the highest point that has ever been in the history of the market. And you're not invested in the market. Why? Why? This is what the S&P 500 has done from October. This is what the S&P 500 has done since the March lows. All right, so what do we teach? We teach that when the 200-day moving average is angled up, you pretty much buy it every single time it hits it, and you will make money. This represents the market. When the market hits the 200-day moving average, you bought it, you would have made money. Let's count how many times you would have won since 2016. All right. 2016, 5 years ago, you would have bought it there, you would have won. And you would have bought it at the lows. You would have bought it at the lows right here, and you would have made money. You would have also bought it at the lows right around here. You would have made money. You would have bought it here. You would have made money. You would have bought it here. You would have made money. We're now into 2018. S&P keeps going up. Here's a really big hit. Let's say you bought it right here and you're like, see, Joel, I told you you were wrong. Look at what the 200-day moving average is doing. You would have been wrong for about 2 months. And then it jumped above the 200-day, bounced off of it again, and then continued to make money. Again, right there. Again, right here. You could call this a move to the 200-day. You can call this a move to the 200-day. And as you can see, this was the March lows. I told you, Joel, during the March lows, we haven't seen a pandemic in 100 years. This is it. The economy is going to zero. Nobody's going to go on Amazon and buy anything anymore. Nobody's going to buy Coca-Cola. Nobody's going to stream anything. Nobody's going to eat burgers. We're not going to do business anymore. That's it. It's over with. Put your money under your bed. And of course, your doomsdayers who aren't millionaires. Sorry to say that. Thousandaires lead y'all astray. Thousandaires don't know what the hell they talking about. They don't. Quit listening to thousandaires. They don't know what they're talking about. All right? Because they're too afraid to make money. They haven't accepted that they can make money. You got to talk to people that have made it and want more and know what to look for to do it the easy way. Because if you had done that, all you had to do is watch this little simple line I draw. This one little line right here. Watch this. This one little line right here. Joe, how did you know when to buy? I buy when people buy. Hold up, Joel. It's not that easy. It is that easy. I buy when other people start buying. The market sold off. People were selling. This was red. It started to go green. We broke a trend going down, and then we went up. And you missed out on the market. Why? Listening to thousandaires. I'm just gonna go open up a restaurant, or I'm gonna go take my money and go invest in this I'm gonna go invest in Melaleuca or one of these multi-level marketing campaigns. When you could have just bought the market. All right. It's easy. Y'all make it hard. Then it gave you a chance to buy there, and then it gave you a chance to buy there. And then guess what? It ran. And now we sitting way up here. We sitting way up here on the mountaintop looking down on all the people that thought that the market cared about people having COVID. The market doesn't care about people having COVID. Millionaires and billionaires are going to continue to make money, and people that are not investing in the market are going to continue to lose money. And until you accept which side of the fence you want to be on, you're going to continue listening to cousin Jerry tell you not to invest in the market. All right. So the goal of today is to only listen to people that are actually invested in the market. Rule number 2, you're going to start vetting the people that are teaching y'all these classes, because 99% of them either ain't investing in the market or don't know the fundamentals, and they're just making you go in circles. And I say this all the time because it's true. All right. Like again, every stock y'all gonna give me today, it's gonna be 4 rules that we go by today. Are people buying it? Are people selling it? Is it above the 200 day or is it below the 200 day? That's it. That's it. Joel, it can't be that easy. It is that easy. It is that easy. All right. And you guys got to figure out how to do it. The quickest way to making $1 million is flipping your money. The quickest way to flipping your money is to buy a stock that's bullish, that's down 50%. But Joe, that don't make sense. If it's down 50%, aren't you going to make 50% back when it goes up? No. If a stock is $100 and it drops to 50, it was $100 and it drops to 50 and you buy it at 50 and then it goes back to 100, you just doubled your money on a stock that already printed a higher number. That's how you make your first 100% return. It's really that easy. All right. The spiders, when it dropped from 350 all the way to 250 or 230, we're now 100% higher. That means if you had a 401k and you were able to catch this low, you doubled your account. You doubled an account that only averaged 13% a year. Y'all hear what I just said? Now, there's a lot of shows out there. I argue with them too. Like, there's shows that'll show you charts, but they won't show you like why they're buying it here, right? They'll show you money that was made, but they don't really show you the charts. So in the insider trading room, our job is to be better than any platform that's out there. I'm going to show your stocks. I'm going to analyze your stocks. I'm going to talk about how big it is, how you're going to be able to make your money. And we're going to make this thing called trading and investing easy. All right. So let's get to some of your stocks. I had to go on and on and on to get to some of y'all stocks. All right. So some of the stocks that I see here. All right. Chastity, I believe your name is. Oh, wants to see Dollar Tree. All right, so Dollar Tree, guys, is Dollar Tree. You know, Dollar Tree, during a pandemic, stocks like this are going to do well because, we want to buy in bulk. So when you go to Dollar Tree, what's the rules, guys? What are the rules we looking for before we look at Dollar Tree? Because y'all ain't going to believe how easy this is. Is the stock above the blue line? Is that line angled up? If that line is angled up and it drops to it, we're going to buy it. It's that simple. The longest you're probably going to be under it, if it's a bullish stock, it might be 30, 60, 90 days, right? We're buying it as investments. I want you to give yourself 6 months to 12 months to be in the profits, right? So when this line was angled up, we stayed away, we stayed away, we stayed away, we stayed away. Then when Dollar Tree went up in value, watch this, like magic, guys, like magic. Y'all ain't gonna believe this. You're gonna be like, hold up, Joel. I done took 5, 7, 8, 9 classes, and not one single teacher taught me this. And it's one little line. And let me tell y'all something. It's the #1 used indicator on the planet. They talk about the 200-day moving average on Bloomberg and CNBC every single solitary day. Every day. They'll talk about the stock. More than likely, they'll talk about where its 200-day is. All right? They talk about it every single solitary day. The problem is when they talk about it, a lot of you guys don't see it with your own eyes, right? So when you see Dollar Tree drop in value, how did we know to buy it right here? You think all of a sudden everybody ran to Dollar Tree and started buying up all the stuff there? Nah. When it hit the 200-day moving average, which was March of this year, all it did was hit this line. It gave you 5 days to buy it on sale. 5. 5. You could have seen a drop in price. You're gonna say, man, this crazy dude named Joel said, man, investing and trading is easy. I don't believe him. I'm gonna keep watching this because I want to see when he's wrong. Because he's gonna pick stocks out of the comment section. And every single time you're gonna see this happen. It's gonna come down, it's gonna hit the 200-day moving average, people are gonna buy it, and then it's gonna go up in price. And you're gonna be like, I can't believe investing and trading is this easy. And it is. You buy options on it, you make even more money. All right. But we're talking about buying it here. So Joel likes the 3-step method, right? So even if it hits the 200-day moving average, I like a confirmation. My confirmation is going to be that it goes up, it goes down. Joel likes to get in on the third wave. 1, 2, Joe gets in. 1, 2, Joe gets in. I'm gonna make a song about this. 1, 2, Joe gets in. 1, 2, Joe gets in. Joe puts a stop here if he's trading. Joe don't put stops on investments. Don't need to. I'm holding it for a year, 2 years, 4 years, 5 years. Don't matter. I don't need no stop. Right? So when it hit the 200-day moving average, some of you guys could have bought it. Some of you guys could have bought it when it broke the trend. Great. Some of you guys could have bought it when it went up, down, up. Some of you advanced traders that we teach, if you want to get a little jiggy with it, that's Will Smith showing my age. You might want to get in when it drops 25 to 50%, and not 25 to 50% here, 25 to 50% using this Fibonacci tool, which is actually the oldest trading tool. This is the oldest trading tool out, right? When they first created charts, this is what they were using. I'm taking you guys back to the basics because y'all done got so advanced using all of these technical indicators you can't even pronounce. You don't even know how to trade the fundamental, simple, basic price action. People buy stocks, they go up. People sell stocks, they go down. Where do they go down to? Probably it's going to revert back to the mean. What is the mean? The 200-day moving average. I just gave y'all $1 million worth of information in the last, 20 minutes. You can use this for the rest of your life. Thank me when you become a millionaire. Just think about me. All right. Now, Dollar Tree went up in value. So let's just look and see what's happening right now. Right? What's happening right now? Right now, Dollar Tree, this is why you should have stayed with Dollar Tree. Because contrary to your belief, if this 200-day moving average is not angled down, that means that anytime you buy underneath it, it's on sale. It's on sale. And it was on sale from May of 2021 all the way until, y'all see how it came up and hit the 200-day and then reversed? Why did it magically reverse right here? I wonder why. I'm going to tell you why, because 1 in 10 percenters know about this. The other 90% of the world don't. So you should be happy and lucky that you're able to watch this video. All right. So it fell in price. But instead of panicking, hopefully anybody that was investing in Dollar Tree, we all know Dollar Tree ain't going nowhere. All of us have been to Dollar Tree. We love going to Dollar Tree. It's just that maybe other investments are doing well. So during that time, if this was an investment, you could have been stacking up on Dollar Tree. Then when Dollar Tree broke above the 200-day, you could have waited until you started to see it angle up. You could have waited to see that 3-step method that Joel teaches to get in. 1, 2, 3. Look at that. 1, 2, Joel gets in. 1, 2, Joel gets in. And then you would be sitting at all-time highs. Y'all see how when it dropped underneath the 200-day, y'all thought something was wrong with Dollar Tree. Because you think that a stock is either going to be at its all-time highs or its all-time lows. Nah, sometimes stocks just take a break and allow people like me to get all the money that I can in it, because we see that the 200-day moving average is still angled up. And then when it went down here, it was on sale. It was on sale. This line is still angled up. Now it started to angle down here. I probably would have been a little bit nervous if I was trying to take a trade here. I also see that there's a gap right here. 80% of gaps fill, and it, it didn't fill that gap, which was interesting. But then it went 1, 2. Joel would have got in. You had about 5 days to get in. Now we sitting at all-time highs. Would you buy it right here? Nah, I ain't buying it way up there. Why? Because I still see 2 gaps on the chart. This gap never filled. This gap never filled. We got a 90% chance that we going back to this price right here. So what I would do if I were you, 2 things. If you want to buy it where it is right now, how would Joel approach this? This is how I would think. I would say to myself, the only way I'm going to keep buying it from here at a higher price is if somebody got a stock tip and they know something that none of us knows, and they're out 6 months from now buying Dollar Tree options. Now, where are you going to be able to see that? Because you can't see it on the charts, right? Where can you legally, I keep saying legally, do your due diligence. Everything's the opinion of Joel's. Where am I legally going to be able to see this? In the options market. So what I would do is I would pull up the options on Dollar Tree. I'm going to go out December, January, and I want to look for what we call unusual options activity. What is unusual options activity? I've been watching Fast Money, and they got a whole section around 1250 where they talk about unusual options activity. Fast Money, y'all need to pay me. It's called unusual options activity. Joel talks about it, the Nigerian brothers talks about it. What the heck is it? It's when big pension funds and mutual funds or millionaires or billionaires buy these big old clunks of options at a higher price with the expectation of the stock going up in value. And it's unusual. So I always want to see at least 1,000 or more, right? So I want to go way out. I don't really see nothing unusual here. I don't see anything unusual here. Now, today we're going to see some stuff that's unusual. As you can see, it starts to pick up, right? You see 1039 options contracts being bought. Then all of a sudden you see 245, 150. You see 150, 150. January. Check this out. 500. I knew we were going to see something. 500 contracts being bought way out here. Interesting, right? So with 500 contracts being bought out here, I kind of like to see 1,000 or more. It's a little unusual, but if I wanted to try to take a gamble and try to buy a higher strike, and you want to gamble a little bit in the options market, or if you want to stay with your stock thinking that maybe it can go higher, it probably is not going to go higher than that 160. Now that's a $30 gain from where we're at right now. So you can also use unusual options activity to kind of figure out how long to be in your stocks. Now we have this thing that we call a call to put ratio as well. What the heck is a call to put ratio? Well, calls are betting on things going up, puts are betting on things going down. Please go get educated on the options market. All right. If you get educated on the options market and you see that there are more people, it's kind of like, are more people buying red cars or more people buying white cars, right? If they're buying more red cars, you're going to see more on the road. So the options market is kind of the same way, right? If you see a bunch of people buying things to the upside, but not buying them to the downside, you give yourself an edge. It's not going to work 100% of the time, people. But if you want to know how I'm able to make money easily, this is what I'm doing. They're telling you how to do this on TV also. But you got to understand what you're doing, right? So that was Dollar Tree. All right. So let's look at another one. Let's look at another one. That was Dollar Tree. I see SMH. Why is SMH important? SMH is important because SMH is the semiconductor, semiconductors. All right, can you guys give me 2 seconds? Hold on. All right, give me 2 seconds. All right, I apologize for that. So let's look at SMH. All right, thank you, Mr. or Mrs. Facebook user. We're going to look at SMH, Disney, and Meta. Now, normally I want you guys to give me one stock because there's a lot of people that are on, and I'm trying to look at everybody's stock. So I want you to give me one stock, and I want you to give me that stock that has a $1 billion market cap or higher. If you don't understand what market cap is, I want you to go to Yahoo Finance, look up that market cap, make sure that that company is $1 billion or higher, or I can't show it. Now, before we even look at SMH, what's the rule? God dang it, Joel, you didn't look at 2 stocks so far, and every single time you were right. Every time that bad boy hit the 200-day moving average, people bought it up. And this is going back to 2019. This is 2 years ago. We're not talking about 2 weeks. We're talking about 2 years worth of information, and every single time it hit the 200-day moving average, it was a buying opportunity. It's not going to work 100% of the time, even though it's worked 100% of the time in the last 4-5 years. All right, you're going to get chances to buy things when they're on sale. You could have bought it there. You could have bought it there. You could have bought it here. All right. These are trend lines, right? So now we're sitting way up here. Look at this, guys. You got another chance to buy it. How many times are we going to see this work? How many times? Yeah, you might have to wait. You got to be patient. But when you're patient enough and you see a stock drop in price, get close to that 200-day moving average, give you that 3-wave pattern that I like, right? It's going to go up, it's going to go down, it's going to start going back up. Joel gets in. Joel, why didn't you just buy it way down here? Because I don't care. Y'all always try to buy the best price. You want to be able to go into a room and say, I bought Apple at the lowest price possible. I bought Bitcoin when it was 5,000. Do you really think I care if you bought it for 5,000 and your brother bought it for 6,000 and then your sister bought it for 10,000? If it's sitting at 60,000, who cares? Nobody cares that you bought it at 4. What I care about is that you rolled it up to 60, because that's more important. Y'all spend y'all whole lives trying to get the best price ever, and then you don't end up making trades or end up getting in nice investments. I be getting up here. I be getting into trades way up here all the time. How many days, even if I bought it here, think about it. Let's just think about it psychologically. When this hit the 200-day moving average, I literally had to wait 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days, 11 days before it started to go up in price. For almost 2 weeks, I had to listen to the most negative news on TV. Every single day, it chips at my psyche. I bought it, I'm losing. Second day comes, I'm losing. Third day comes, I really feel like I'm losing. Fourth day, I have a bad day at work, I'm losing. Fifth day, I don't know, dog or cat dies, I'm losing. Like, I'm psychologically, I'm getting crushed for 2 weeks. And then it really starts to go its way. Now, as an investor, that's fine. You know what I'm saying? If you're able to stomach stuff like that. As a trader, very hard to stomach 2 weeks of losing. Most of you guys would have been out of here. You would have said, this strategy Joel's teaching is crap, I'm getting out, and you would have missed out on this. Joel would have got in right here. Joel would have been up in profit the next day. And then the next day it went higher. And then the next day it went higher. And even though there's negative stuff happened to me at work, I turn on my accounts and I see that I'm up. And I'm like, man, trading is easy. Investing is easy. All right. And then you can't even be as happy with me because you've struggled for 14 days. So buying the best price is for those ironclad, you know, anybody that can trade robotically and they don't really psychologically or emotionally get messed up with the market. Great. Buy it here. But this could have easily, guys, this could have easily, SMH could have easily hit the 200-day and gone down for 60 days. Remember, when it hits the 200-day, you got like a 90% chance that 1 year later is going to be higher in price. So why struggle? Just wait until people start buying it again. If you're using my tool, because I know a lot of you guys are like, Joe, how come all of your candles are green and all of these are red? Oh, that's because I'm using an indicator that I found about 6 or 7 years ago that I don't really see anybody else using other than my cousin and the students that have learned from us. And then the person that actually created it, called Mr. John Carter. So I can see trends better than you. And psychologically, you got to be able to trade that way. It's easier to trade a market when you see green, red, green than it is when you see, do I have a clean chart that has it? I don't think I do. But instead of seeing a normal chart where it's going to be red, green, red, green, red, green, red, green, it's just easier to see the process. But the problem is you're not going to be able to find this indicator anywhere but on the TD Ameritrade platform, and I've seen people use it on TradeView. But guys, we sitting at all-time highs. Like, we sitting at all-time highs. We were at all-time highs today, just like the S&P 500. A lot of you guys have been catching Nvidia because of that. So let's go to Millionaire Challenge. Let's add some of these stocks that we're looking at. Earlier, we were looking at what? Dollar Tree. So anybody that wants to look at some of these stocks later, you'll be able to refer back to this chart or this video. Share the video too. What? It's like 100 people on. Share the video. Share the video, please. All right, because we want everybody to understand how to do this. You don't have to keep this information to yourself. I didn't do it. You shouldn't do it either. But it looks like Dollar Tree can fall in price. So we're going to put a trend line right here. And a trend line right here. Can it drop? Yeah, it'll drop to here. Can it drop there? Yeah, but it's bullish. All right. How much can this drop to? This, the SMH can drop all the way down to the 200-day moving average and still be bullish. So I want you to be careful. Now let's go see if there's unusual options activity. There really isn't any. This is January. Hold up. That's January. At the end of the week, it looks like the options that everybody is buying is the 305 strike. Well, we at 307. So if you were buying next week, for you guys that don't want to do your homework, it looks like the strike that everybody is buying is the 330 and the 320 strike. But even looking at these option strikes, I don't really trust it because on the put side, you got about 288 and 200. Remember, I like to see like a 1-to-5 ratio. I like to see like 100 over here and 1,000 over here, right? I like that 1-to-5 to 1-to-10 call the put ratios. I don't really like the numbers to be similar, or I just won't take the trades unless I'm intraday trading. And even on the December side, you got a bunch of puts being bought at the 245 strike. That's not good. This might be with the options not being more than 1,000. Sometimes somebody might be buying, they're buying both sides of it. So I don't really see any unusual options activity. The options are picking up towards December, but I don't really see any unusual options activity in the SMH, people. I just don't. Let's go all the way out to, okay, here we go. We got a 330 strike. Anybody that's trying to go way out to, what is this, May? If you can afford it, you got a $1,600 strike, unusual options activity at the 330 strike. Okay? And I kind of like it because this is what we call unusual. Why? Because look at the put side. Ain't no type of volume like that on the put side. There's open interest, which is different, but there's not volume there. So, if you want to take a shot, there you go. All right. Send me send a check in the mail if you make some money. But I don't really see anything after that. I don't know what's going on in May. Why May? I don't know. But there is some very unusual options activity on the SMH in May. Now, when I see stuff like that, the very first thing I do is I say, all right, if this is the semiconductor ETF, I'm going to look up NVIDIA, which is the number one semiconductor company on the planet. Now, I think I'm up, I think I'm up like 500% on this stock in the last 18 months. So I've made some significant gains in the actual stock. Look at these options contracts. These are stupid. It's more options activity going on in NVIDIA than the SMH. You got 40,000 contracts being bought at the 330 strike for this week. Now, I don't really encourage people to buy that way. But let's see what's going on in December. You got 3,000 over there. Ooh, look at this. Very unusual options activity out here at the 340 strike. 7,600 contracts. That's December. Let's go out to January and May. January. Look at that, guys. 11,000 contracts at the 350 strike. A lot of great options activity. Now check this out. Let's say a lot of you people think that you can't make, but you keep trying to buy options at the end of the week. I see y'all doing it all the time. And I'm like, yo, give yourself enough time to make money in this option. Now, these options were down today. I see that it's down 18, it's down 8%. So you could have lost a significant amount of money today. You were probably going to be down 17% on these options. The puts were up 20%, but you protected yourself by going out a little bit further. All right. Again, I want you guys to get educated. You can't do this on Robinhood. All right. Some of you Robinhood traders, and I love Robinhood, right? I have a Robinhood account, but you can't analyze options and stocks the way that the 10 percenters are analyzing the stocks on Robinhood. It's just not enough information there. You can use the information on TD Ameritrade and then trade on Robinhood. Let's look at NVIDIA's chart. NVIDIA's chart. Let's go back to 2019. It's gonna make you mad. Gonna make you mad. Look at where everybody bought it. That was the March lows. God dang, Joel, you mean to tell me every stock on the New York Stock Exchange pretty much reversed at the 200-day? Yep. That's how we knew it was the bottom. Hit the 200-day. You had 1, 2, 3, 4, 5 days to buy it. Joel was going to get in way up here. Yeah, cousin Bob was able to get it for 46. And he reminds me every day that he bought it for $46 and I bought it for $66. But guess what? Who had to deal with pain the longest? Cousin Bob. Cousin Bob bought it here. Luckily, it reversed 5 days later because this could have easily gone down for 15, 20 days until the billionaires decide to buy it again. Luckily, cousin Bob did right, and it started to go up, and the pain was only 1, 2, 3, 4, 5, 6 days. I don't like pain. I wait until it goes as far down as it's going to go. Because a stock can't go up until it starts going up. And guys, I keep telling y'all, you're not going to buy it for $44 one day, and then the next day it's going to be at $300. That's not how these mega cap companies work. NVIDIA is not going to be 200 billion one day and then $1 trillion the next day. It's not going to happen. It takes days to get to $1 trillion. It takes days for the market to pour the billions of dollars into the stock in order to make it go up in price. You got time to catch it. You're not going to miss out on it, right? And I see you guys do it all the time. You always feel like you missed out on a stock. And the reason why you feel like you missed out is because you don't know where it can go, because visually you can't see it. So you are, in fact, gambling. If I can't see what I'm doing, if somebody tells me to go into this subdivision and we about to buy 3 real estate properties, and then I close my eyes and say, all right, tell me about this property. I want to see how it feels. Oh, Joel, it's a 5-bedroom. Just imagine the lake behind it and the trees, and it's a 5-bedroom, 2-bath, tri-level home. It's a modern style. And I'm just imagining, okay, what color is that's what y'all are doing with stock. You're imagining the charts instead of pulling up the charts. It's a whole different story when you can see it. When I can see it and I'm buying a fundamentally good company, this is the easiest trade ever. Because once the billionaires start buying it, like, me and the other millionaires, not that I'm a billionaire, the millionaires and the billionaires, you're going to see it do this every single time. You're going to see it go up, and it's going to stair step up. It's going to go up. It's never going to go up in a straight line. It's going to go up in lines. Nothing goes up in a straight line. The most seen pattern in the market is not straight lines. The most seen pattern in the market is S patterns. S patterns. S, or stairs. Everything stair steps. They stair step down and they stair step up. And if you didn't know that and you've been trading for 3, 4, 5 months, you are a rookie. But you're learning how to do it correctly now. And you see, all it does is stair steps. So Joel trades within those stair steps. 1, 2, Joe gets in. 1, 2, Joe gets in. 1, 2, Joe gets in. 1, 2. Y'all see how many times I could have got in? This is March 23rd. This is how easy it is for me to trade something like NVIDIA. Y'all be pulling up 30-some indicators, flipping back from 15, 20 different charts. And Joe comes out and says, I'm just going to do the counting system. 1, 2, Joe gets in. 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 How come every time Joe gets in, it keeps going up, keeps going up, keeps going up? Look at this. 1, 2, Joe gets in. 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 I ain't trading them flag patterns. Flag patterns don't work. All right, you don't want to be a 1%er. 1, 2, Joe gets in. 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 I could have missed this trade 37 times. When did it lose, guys? When did it lose? I won what? 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10, 11, 12, 13, 14, 15. Okay, it went sideways here. Then it went 16, 17. Then it lost. The option, if you were trading options or trading this thing for like 2 years, you would have won 17 times in a row. And yet, y'all don't know how to win in this game. I don't understand it. I understand it is because y'all make trading and investing hard. And it's either a stock is going up or it's going down. You got a 50% chance of winning. And when it goes up, it ain't going to go up in a straight line. It's going to go up. It's going to come down. Then it's going to go up. Then it's going to come down. Then it's going to go up. Then it's going to come down. Then it's going to go up. If it's a momentum stock. If you're trading it, you know when to get out. 1, 2, Joe gets in. If it breaks here, maybe you get out. Okay? You risk a little bit to make a lot. Risk a little bit to make a lot. If you are thinking long term, you just buy it when it hits this 200-day. Look at this. It won here. It won here. It won here. 1, 2, Joe gets in. You remember how it lost right here? Then it just kept winning again. 1, 2, Joe gets in. Sing it in your head. 1, 2, Joe gets in. 1, 2, Joe gets in. It just the easiest trade of the century. Easiest trade of the century. Yeah, Joe, but I didn't know about NVIDIA. All right, well, let's pull up the 2 largest companies in the world. Let's pull up Apple. Joel, if you show me this chart and it works, I'm going to fire my teacher. Well, get ready. Somebody just said Apple. Let me pull this down. We're going to pull up Meta in a second too. Apple. I'm going to do this quick because what, it's 7:15 and I got to get off soon. So I'm going to go through all of y'all stocks pretty quickly. But before I go, you know, I want y'all to sing the 1, 2, 3 song. All right. Joe would have got in there. Joe would have got in here. Joe would have got in here. Joe would have got in here. Joe would have got in Apple. Ooh, that was a big move. This was tough. Maybe you lose right here. All right. But 200-day started to angle down. It starts to go down. At least even on a loss like this, this is what I want y'all to do. When it hits the 200-day, why does Joel throw this one little line on it? Because this protects me from myself, right? That protects me from myself so that I can wait until the pressure goes down. All right. And this is just if in case you put the line on way back here, because some people say, well, Joe, you playing, you know, Monday morning quarterback. All right. Let's say this is what you saw. How would I have protected myself from Apple? Colors. Y'all remember that movie Colors, Colors, Colors. Look, watch. It goes down in price. You just wait till it's green. Just wait. Red or green. Joel, it can't be that easy. Red or green. 3 greens. That's 2. 3 greens. There you go. 3 greens. Y'all see that? 3 greens. You get in at 39. The lowest that it goes to is 37. You stomach this loss for about 3-4 days. It never came back. Ever. Never came back. Never came back to 39. Never. 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 Where are we at now? Where are we at now? 161? Even when it started to go down, that's why Joel waits until it goes up. Watch this. Remember what I told y'all? 1, 2, Joe gets in. 1, 2, Joe gets in. 1, 2, Joe gets in. Flat patterns don't work, Joel. All right, you don't want to make money. 1, 2, Joe. 1, 2, Joe gets in. 1, 2, 3. 1, 2, 3. I know a lot of you guys can't see it. All right. Then it hit the 200-day. Joel said just wait until it starts to go green again and then count to 3. Green, 1, 2, 3. And I should make some money. 1, 2, 3. And there you go. Apple starts to run again. So we're sitting at all-time high. So you could have bought it here. We all know that you could have bought it here at the March lows. Everybody missed it except me. Came into the room, told everybody to buy it. So, I mean, you going to listen to these cats or you going to listen to a millionaire tell you how he, I mean, I got $100,000 I'm putting in Apple. And you're going to go listen to this cat that's spending 50. And they've been trading for what, 30 days? Because they went and watched The Big Short. Y'all got to stop doing that. That's why you can't make money in this game. All right. Listening to the wrong people. All right. And I don't want you to buy things just because I'm buying it. I want you to use the tools I'm teaching you today because they're fundamental tools. Stocks revert back to the mean, which is the 200-day moving average. They're the best buying opportunities. It gets close to the 200-day move, the 200-day moving average. It breaks its trend. It starts to go green. It goes up. So if you were thinking about options on Apple, you would have made a killing. I mean, every single Millionaire Challenge video we do, and I show the unusual options activity for Apple, they exploded in price. And I'm not the only one talking about these unusual options. Now, I don't want you to run out there and buy them again. But when you see 300,000 contracts being bought, now you're starting to see the puts kind of catch up, right? This is still a 1-to-2 ratio, right? If you doubled this 140, it'll equal 290. So it's still call city right now, right? Even on this side, you got 30,000, 50,000, and the biggest you see over here is 13. They're increasing as we go into Christmas. Doesn't mean it is going to pay out. But if I'm trading and I want to take a chance, instead of you trying to pick what you think the strike price is, start trading what the money is, follow the money. And that's what we try to teach when we're doing unusual options activity. All right. That was Apple. Oh, let's look at Microsoft real quick, and then I'll go back to Meta. Microsoft, largest company in the world. How did you not know that? Microsoft. I said in the country, in the world, right? So you can go over here and look at market cap. Oh, Apple. Okay, so Apple surpassed Microsoft today. So Apple, they go back and forth. Apple is now the largest company on the planet again. Last time we did this, Microsoft was the largest. So let's look at Microsoft. Let's look at its charts. Let's get mad at ourselves, but don't get mad at me. Go look in the mirror and say, man, next time I start trading, I'm going to learn this technical side of the market. And I'm going to see how it doesn't matter if a pandemic is happening. Billionaires and millionaires are going to continue to make money. And people that are not invested in the market are not going to make money. So why is it also a great time to invest in the market? Why is it such a great time to become a millionaire? Because you got the feds printing money, right? They printing money. That means they're artificially inflating the market. That money's going to find its way somewhere in the market. And if they're artificially inflating the market, you should see a lot of inflation happening, which means the cost of your dollar is going to decrease. The power of your dollar is going to decrease, which is another reason why Bitcoin is going up, if you're into hedging yourself against inflation. But look, guys, Microsoft just comes back and hits its 200-day. Like we're 100% today on buying at the 200-day for the last 3, 4, 5 years. Trading wise, this is a wonderful time to be making money in the market. And guess what, guys? We sitting at all-time highs. But I got to put on Microsoft. If you got to put on Microsoft during the Christmas period where Microsoft makes the most money, you are a rookie trader. You can't trade. You can't trade with me. You can't have my money to trade. This is the worst time of the year to trade Microsoft. Doesn't mean that this put ain't gonna work and drop 50% because there's a earthquake or something that might happen. But if you try to do that consistently for the next 10 years, you're gonna lose your money. Because companies like this, everybody knows this is the time period they make money. Everybody knows this because it's Christmas time. It's when most companies go into the black. It's when most of these companies are going to sell their most products. Their new products come out around September, October. They start renewing contracts with other companies that start in the beginning of the year. You got new advertisement dollars coming in. It just, everybody knows it. Everybody knows it. And you should be getting educated with it too. But it's holding this trend line. Let's look and see should you be buying it today? Nah. You know what I'm saying? Let's go and see if there's some unusual options activity. 40,000 contracts. None. Okay, there's some unusual options activity out in December at the 350 strike. None in December. January, a little bit. You got some at the 350 strike still, all the way out to January. None in February. None in March. None in April. none in September. So I don't really see any unusual options activity on Microsoft. Doesn't mean that Microsoft can explode in price. Just means that it probably ran really, really, really hard, became the largest company on the planet, and everybody was like, hold up, shouldn't it be Amazon or Apple? I mean, Apple just decided that they were going to have an electric car too. Probably why Apple, started to run again. So it's little things like that that happens in the market. Let's look at Metaverse. Meta, which is Facebook, Meta Platforms. Like, is it Meta or is it Facebook? I guess I got to look it up too. All right. Same thing, guys. 200 day, 200 day, 200 day, 200 day. It's like a record. It's like a broken record, right? It's like Groundhog's Day. You should have bought it here. We bought a whole bunch of contracts here. If you were waiting, it didn't matter. You could have pulled out your Fibonacci tool. You could have pulled out anything, and you would have said, Joel says get in on the third wave. 1, 2. Joel gets in. 1, 2. If you were in, you were up immediately. Even if you were buying options and you were up on those options and you were 3, 4, 5 months out, all of those options were up. Because when that momentum came down here and hit this 200 day and then it bounced off of it, and it started to stair step up, it's going to bounce up. It might not bounce all the way to all-time highs, but it at least should have put you in the profit. So look, shoot, that's crazy options. Y'all see this? This is November. Sorry about that. 50,000, 60,000 contracts. Let's go out to December. Yeah, you got some at the 380. I don't see any in December. I don't see any in January or February. So be careful if you're trading Facebook. If you're in the stock, stick with it. But I don't see any unusual options. I don't even see unusual puts. I see 1,000 out here, way out. And I mean, that's 2023. So I'm not really buying leaps that far out. And I don't see anything on the put side. So I don't really see anything unusual. Now, if you were trading it for the end of the week, and I don't really advise this because most of you guys can't do it. Looks like everybody's buying the 350 strike. That's what the 355 strike has the most contracts. Doesn't necessarily mean that that's what we're going to hit. And remember, did we hit 355? I mean, we already almost came close to it. So I'm not going to trade anything like that, right? All right, so let's look at that was. Oh, we need to look at Disney. All right, let's check out Disney. Disney. Oh, Disney's a good one. All right. Because I'm even really thinking about buying Disney. Why? Because it's Disney. All right. So there's a couple of things that makes me like this trade. It looks ugly right now. What did I tell you guys about ugly stocks that hit the 200 day? Now, this did get people. I get it. The 1, 2, 3, and it was green. I get it. But it went up, it went down, and never gave you that third wave to the upside, which is what Joel likes to trade. This is the main reason why I only get in on that third wave, because you might get a fake out. It might go up and then down, up and then down. So it'll go here, it went up and then it went down. It never went up, down, and then started to go back up. That's why I like momentum trading, because what this did was it went down, up, and then continued to go down. You see that? 1, 2, down. 1, 2, down. Okay? 1, 2, down. So if I was a betting man and the 200-day moving average is angled down, Joel is going to stay away from Disney for a while. Okay? If you lost on this trade, take your losses, get out. People lose. The best traders out there win 75% of the time. I win 1 out of 4 trades. You're going to lose. If you are losing, get out. Okay? Because it looks like it wants to go lower. Now, I don't know if there's any. Oh, and then it also had earnings already. So the earnings already came out and Disney is down. Now, what I do love about Disney, These are for your options traders that are trading Disney. If you're buying this for your kids' account, just because we see it going down, guys, I want you to buy Disney right here. If you're going to hold something for a year, for your kid's 7 years old, and you're just buying it for their portfolio, then you need to be buying Disney now, because Disney is, let's see, Disney right now is on sale for the low value of, Disney is down 24% from the all-time highs. That is when people love buying Disney. Disney doesn't really give you a chance to buy it cheaper than about 30 or 35%. Like, Disney doesn't really drop 50% of its market cap because it's a big company. Disney is, let's see how big it is. Disney is $280 billion in size, right? It's not going to lose 100. I mean, I'm not going to say it can't, but if $140 billion comes out of Disney, that's crazy. That's a lot of money to come out of a company. Most hedge fund, pension funds, this is one of your classics that people hold. The only reason why it's not doing well now is because the economy is still a little shaken up. The parks are not open up yet, but Disney is in talks about getting into the metaverse, and they know what to do to try to get their stock going again. So, as an investor, I'll buy this tomorrow. I'll probably go into my long-term account and buy more tomorrow after seeing this. But as an investor, I'm thinking 1 year, 2 years, 3 years, 4 years down the line. As a trader, I'm going to hold off until we break this trend, we go down a little bit, and then we start to go back up. And the first place it's going to go to is this 200-day. So if Disney decides to run, I'm telling y'all right now, it's going to run to 179, because that's what stocks do. All right. It's going to run back to its mean, or it's going to run back to where it broke out of. You got support right here. So with support being right here for Disney at 167, if we start going back up and we get above this support line, we're going to run straight to 180. Okay. Maybe even as high as 187. But the 200-day, guys, it's angled down, but it's still relatively straight. So Disney is one of those ones everybody's is really, really watching. I still love it as a long-term trade. I'm sorry, a long-term investment. As far as unusual options activity, you got 32,000 at this 155 strike. All right, that's unusual. You got 6,000 here at the 160 strike. Let's go to December, January. You got 6,000 out there, so it's unusual. December, January. Look at this, guys. It starts picking up in January. 5,000 contracts. Now, here's the thing. When do people start going to Disney again? Right around May, June, right? If I come out here and see a whole bunch of contracts in May, June, you might want to take a shot. You might want to buy this option at the 150 strike. It's going to cost you $1,500, but you're starting to see people make a play at it. But before you go out there and buy it, I don't like the volume on the put side. But the volume is at the 150 strike. All right, I do see some open interest is starting to open up. People that own shares are allowing other people to borrow from them. So, and then it stops after that. It stops after June. So watch it. But I like Disney. I like Disney. Those are one of those stocks where sometimes you give them the benefit of the doubt because they are Disney. All right. Let's see if there's any others on the list. If not, I see MMAT. I've never heard of that company, so hopefully it's large enough. All right, it's $1 billion company. We'll take a look at it. I don't know what MMAT does. Oh, metamaterials. Okay, so metamaterials, 200-day moving averages angled up. So you want to buy it, at the 200-day. Now, When it hit the 200 day, Joel would have said, stay away until it starts to go green, right? So when it went down, that's red, 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 red. Joel says, stay away until you at least get 3 green candles in a row. 1, 2, 3. See that? 1, 2, 3. Joel would have probably taken a shot there. All right. Today we're talking about longer term trades. If you want to talk about intraday trading, every week, every now and then I might come in and talk about faster trades, and I'll probably talk about a couple if I have time at the end. But it started to go green. So I'm thinking, 6 months, 3 months out, 3 months minimum out. Give yourself some time for that trade to work out. Even if you had bought it here on August the 12th, you still would have been all right. Because even if you bought it here on August the 12th, you were back at break even by August the 24th. That was 12 days later. I'm giving myself 3 months, 6 months, and you would have made a killing on this trade. Guys, it went from $3.50 to $6. I don't even want to see what type of options money that would have made you. Then it came and hit the 200 day again. How would Joel have traded this? Would he have bought it just because it hit the 200 day? Nah. Joel would have looked for a move up, a move down, and then start to go back up. I probably would have bought it right here. But I'm also going to give myself about 3 months. And if I'm buying options on it, now if I'm buying it in stock, I got time to wait for it to come back around. If I'm buying it in options and it's November, the only way Joel is going to buy this is, first of all, I got to go all the way out to March. If I don't see no unusual options activity in March, April, May, I ain't buying this. Because if the people that got money ain't taking a shot at it, then what makes you think it's going to turn around? You're buying and praying, and I don't want you guys to buy and pray anymore. We're not buying and praying anymore. That's gambling. It's going down, which is red. I want to wait until it breaks above here and at least starts to go green on the John Carter. But if you want to take a shot here, it better be, because when you look at the options and you go all the way out to January, it better be unusual. And when I say unusual, it's got to have 3 to 4 to 5 times what you see over here. And I just don't see it. Right? This is January 2022. This is December. Okay, this is kind of unusual at the $5 strike. You got 3,000 contracts. So I said I didn't see it, but guys, December 17th is what, 1 week? What's today's date? So we got, so it's the 22nd. Okay, you got yourself about 20 days. I wouldn't be mad if you guys take this option. It's $20. Why not take so a lot of you guys throw $20 down the drain? $20 option on Meta. I'm down with that. I'm down with it. $20. I might buy it tomorrow. It's $20. If that $20 works out, this $20 can make me, if this goes to $5, I can make $100, right? I can have my first, 100% return, and I only spent $20. That's the rule of the Millionaire Challenge, right? I'm trying to get into things that can double in value so that I can take those funds and try to put it into something so that it can double in value. It doesn't have to necessarily be in options, because it's going to be very hard to win 9 or 10 times in a row. Okay, that's just my goal. My goal is to try to flip 1,000 to 1,000,000 in 10 trades. That's just my goal that I'm going to set for myself, that I'm going to try for the rest of my life. And I know I'm going to get there because I've gotten close. All right, as far as winning percentages, not capital. All right, because once you start getting into the 5 figures and the 6-figure level, your brain, your mind start playing tricks on you. All right, so that's just my goal. But I wouldn't, if you want to take a shot at this one at the 20, it's all right. I want to start seeing it go up. And then I think that $5 strike is just sitting at the 200-day moving average. So that's a decent trade. All right, let's look at Noble. wants to make sure that it's 7:40 right now. All right, Noble and I and Shamika make sure that right around 8 o'clock after I end this, uh, we want to talk about the annual Aruba Retreat Conference. Okay, that's going to be the special announcement that we talk about after this, and it's so that you traders and investors we can all meet out of the country, have a little bit of fun, and it'll be our first annual Inside of Trading, uh, retreat that we're, and we have what 100 openings, right? There's already a wait list of over 100 people on that wait list for now. So some people might not be able to make that trip. So if you get on the wait list, you still might be able to make it on that particular trip. So we might even open it up to more people. So we're really excited about that. But let's look at a couple of stocks real quick. Let's look at JCI and SUM quickly before I get out of here. JCI, first of all, we want to see how big JCI is. JCI is 56 billion. Okay. And then we have what? JCI and what else? Oh, it's right there on the screen. SUM. Some. Give us some. Beyonce got a song where she says that. Me and my wife cracks up every time she says it. All right, JCI. Look, guys, when the 200 days angled down, Joel's gonna stay away, right? So if you gotta trade something, even though the 200 day is angled down, you can get in early using the what would Joel do method. Joel gonna wait until it gets up here. This is just how I am. But if you're going to trade something like this, you want it to break the trend. You want, because this is all red, you want it to break the trend. And then you got to wait till it goes green for at least 3. 1, 2, 3. Bam. You can take a shot. If you lose, at least you waited until it broke the trend. It went green. And then it started to go up. Look at there. Joel would have got in here. 1, 2. You would have stomached all of this. I would have said, I'm going to make money elsewhere. And then I'm going to come in and make money with you right here. 1, 2, 3. Now, I know this is angled down. So in all honesty, I probably wouldn't be in right here. I probably would wait until I see it flatten out a little bit. And then 1, 2, 3, maybe it go green, I'll get in. So I probably would have been in right around the 42 range. Okay, and I would have had the stomach being wrong for about 30 days. I would have been mad thinking that it was going to come down to this 200. But if the market is bullish and this company, Johnson Controls, is following the S&P, then it's going to go up with the market. Y'all see all that money you could have made? Trading and investing is easy when you know what to look for. Will I buy it way up here? Of course I'm not going to. Unless it has unusual options activity. I don't see any. I don't see none. If it's not 1,000 or more, don't even, yeah. But you can make a whole bunch of money in the stock, all right? But I'm not going to buy it at all-time highs. All right, let's look at Summit Materials. Again, 200-day moving average. How do we treat the 200-day? If it's angled up and we hit it, I'm going to stay away from it until it breaks this trend. Minimum, it's got to start going green. 1, 2, 3. Joel would have been in, would have struggled for a little bit. I'm going to wait until it gets above this 200-day. Joel ain't going to be in. But look, every time it hit the 200, it bounced. Look, it bounced backwards. So for you short sellers, this is when you short. Okay? Short there. Short there. Short there. You would have won 5 times in a row. 1 short win, 2 short win, 3 short wins, 4 short wins. This one wouldn't have won. This is where Joel would have been in. Right around that 1947 range. Oh, wait. No, I wouldn't have been, because why? This is angled down. I want to wait until it starts to angle up. Right here. That's what Joel likes to see. 1, 2, 3. 3 candles. Joel will be in right around there. as this starts to go up, Joel wants to make money going up with it, and then he's going to wait until it gets close to it again. If you missed that, doesn't mean that you missed the move, doesn't mean that you missed it. It just means that you got to say, I got to get in when Joel gets in. 1, 2, Joel gets in. Joel doesn't struggle as long as you struggle. Joel struggled for 2 days. And Joel caught this whole move with you. And Joel got in late. Y'all see how I didn't have to endure all of this crap? I didn't have to endure all of this. Which it was going up. I got in late right here. 1, 2, Joel gets in, sitting at all-time highs. Am I going to buy it up here? No. I'm not going to. You can't make me. All right. CAMT. We looked at Apple. Let's look at CAMT. What time is it? 7:46. All right, CAMT. Where? Okay, CAMT. $2 billion company. How are we going to treat this? Have we seen a stock lose yet, guys, when they hit the 200-day? Nope. Ooh, look at how it reacts. It just loves this 200-day. You just got to be patient and wait for it to get there. There are going to be days. I think next week I'll talk about the 50-day. Every single week I'm going to show y'all a different indicator you can use to make money if you know what to look for. It never even gave you a chance to get close to it, but this is how I want you to trade this. If this bad boy starts to drop and it starts to go red, and then you say, man, just wait till it goes green. Now, this is too high for me. I would like it to go 1, 2, 3 way down here so that it can move to here. But even if you bought it there, which I don't like, you'll be winning now. But I don't really like the 1, 2, 3 candles to already be at the top up here. You know, I probably would have 1, 2, 3. It went green. Maybe I would have gotten in here. I would have been losing a little bit. See how you missed this? It went 1, 2, 3, 1, 2, 3. Didn't quite get to these highs. You know. All right, so that's a good one. Any unusual options activity? Let's check. None. No unusual options activity. Puts and call open interest is about the same. So I personally wouldn't buy this in options. If you love the company investment-wise for a stock, wait for it to come back down close to this 200-day. All right, I think that's about it. All right, so let me look at a couple over here that we missed. Let's look at Rivian. Rivian, boy, gave back all the money. Rivian just IPO'd on November the 10th. I had a funny post that came out that pretty much told you guys how the conversation went with Rivian and Forward. Okay, but Rivian went up in price, and now Rivian is going red on the John Carter. All right, not looking good. So if you were thinking about buying Rivian, wait until it starts to break back above here. Now, because it's an IPO, if you want to try to get in because it was all the way at 180, that's fine, and we're at 100. That's a big move. I don't want you to wait 3 candles because in this particular case, 3 candles can take you right back up to the highs. If we start breaking this and you get maybe 1 green candle and you want to take a shot on it, especially as an investment, take a shot at it. Our rule is that when you buy an IPO, we want you to wait 90 days. If you wait 90 days, you get to wait past the lockout period, and you can possibly get that stock at a better price. So when Rivian IPO'd in November, December, January, February, you can start buying Rivian sometime in February, in my opinion, and you still will be okay. So because Ford decided to leave Rivian today, you started to see Ford pop. Now, when should you have bought Ford? Check this out. I hated Ford for 20 years. I hated Ford. Let's look at the month chart. I've hated Ford from 2014 all the way to now. For 7 years, anybody that did a consultation with me and I saw Ford in their portfolio, I was like, why do you own this? And I made them take it out. I literally told them, get that out of here. Just recently, mid 2020, 2021, I finally, with my own eyes, saw Ford breaking above its trend, its downtrend for 7 years. And then they decided they were going to build an electric vehicle. We saw the stupidest unusual options activity in Ford. Like, it was absolutely ridiculous. I think right around the $7 level where I started to buy, we started seeing options that were like 400,000 contracts. So we knew that was probably Ford buying, options contracts probably on his I don't know, but it was some big players that were buying money in Ford. Okay. So when it started to hit the 200-day, we kind of jumped it, right? So when it went up, down, where did we buy it? Up, down, and then started to get back in, we started to buy Ford right around here. So we've been in Ford since it was $7. We've been buying the $10 strikes, $15 strikes, $20 strikes, making money all the way up on Ford, because as it started to go up in value, all you had to do was wait until the third wave. 1, 2, wave. 1, 2, get in. 1, 2, get in. 1, 2, get in. Right? It took a break right here. It never got to its 200-day moving average. This caught a lot of people off guard because they were trying to buy it when they saw the 3 candles, and I get it. 1, 2, 3 people were getting in here, but if you gave yourself 6 months, you would still be winning. That's why you got to give yourself some time. That was April. You only had to wait, okay, 30 to 40 days, and you were in the profit. Ford just recently got close to the 200-day. It broke its trend. It went green. You should have been buying it here and here. You would have made a killing. And it's just been green. I don't care how you feel about Ford. Who do you know that literally came out and said, guys, I don't normally tell y'all to buy something, but please buy it. Like, please, please. I'm tired of making money by myself. Please. Now, do not buy it now. You missed out. You missed out from 7 to 10 to 15 to 20 to the Rivian IPO. You missed it. All right. So what are we going to wait for? We got to wait for Ford to drop back to its 200-day moving average or get close to it. When it gets close to it, if you want to take a shot at it, take a shot at it. If it breaks the trend and it starts to go green on the John Carter, then you can buy it. If you want to buy options on it, let's go see if it has unusual options activity. 110,000 at the 21 strike. Let's go all the way out to January. January, 10,000, 30,000 strikes, 2,000. It's okay. 6,000 in March. Ooh, but look at the puts, guys. Be careful. Be careful of Ford. Ford wants to go back to its 200-day. It's been hot. It's been hot. But the pull, the call, the put ratios are like the same. I don't like that. I do not like that. Now, September, I don't like that. January, I don't like that. I don't see the puts. I don't see the calls in Ford. I actually think this trade, I don't want to say it's over, but I don't see the unusual options activity that I normally see. Now, I do see some out here in February, okay? 6,000, I see 1,000 over here. So be careful. The trade might be over February, March, April, okay? It might take a break for about 6 months. Get down close to that 200-day. Those F-150 electric vehicles will start rolling out. Then you'll probably see Ford start picking up and going up in value again. But the electric car space has been so hot that it's almost hard to make money in that area right now, as far as trading. As far as an investment, I still believe Ford can grow. It's an $80 billion company. Tesla is a $1 trillion company. We'll look at Tesla real quick. We got 5 minutes left. Tesla, been telling y'all to buy Tesla since it was a $25 billion company. It's now at $1 trillion. I made y'all money for 5, 6 years. Nobody done sent me a check yet. I've been making you money in Tesla before y'all knew what a Tesla was. All right. Taking pictures at the dealership. Y'all are like, what is this Tesla company y'all talking about? I'm like, you know, Elon Musk, the guy that created PayPal, where he sold his company and PayPal decided to open up an electric car company, and now he's trying to get into rockets. And y'all are like, who is this Elon dude? 5, 6 years ago. Now everybody knows who he is. All right. And I actually believe that Ford and General Motors have better growth potential to the upside than Tesla. Now, I own Tesla. So I'm not saying don't buy Tesla. I'm saying buy all three. Buy Tesla, buy Tesla, buy Ford, buy General Motors, buy Lucid. Have like a little electric car company ETF. You don't have to put all your eggs in one basket. But check this out. This was the March lows. How would you have known to buy Tesla? Tesla hit the 200-day moving average. It started to go up. It started to go down. Started to go back up. This is all green. You would have said, this feels funny. So-and-so bought it for $70 and it's 50% up. Why would I buy Tesla 50% up? Oh, because it came from 200. That's why. When you worried about, y'all see this? You were so worried about this little itty bitty move that you missed out on all of this. You so consumed at this that you don't know what it can grow to. All right. And I don't want you guys to make that same mistake. So again, what is the quickest way to making money? All right. What's the quickest way? It's flipping $1,000 10 times. So I'm coming to you guys from Decatur where it's greater. Flip that money. And I'm out of here. Peace.